Welcome to Financial Module Overview. This stack of applications cover accounts receivable, accounts payable, and general ledger functionality. It is tightly integrated with procure-to-pay and order-to-cash cycle. Let's start with accounts payable, that covers vendor bill booking and making payment against the vendor bill or advance payment made against the purchase orders raised. So let's open this bill number 1, which is booked in this case for party PLM pipeline, and this bill is raised against MRV, which means Material Receipt Voucher. PLM has raised this bill, and this bill is created using option against MRV. In this section, document number 4 is indicating material receipt number along with receipt date and warehouse that received material. Furthermore, this is also displaying respective purchase order number, purchase order date. These are 2 items received in this particular receipt for which the value calculated is $115,000 in total. Other than this, you can select prepayment or advance payments made to this vendor and straightaway adjust fully or partially against this bill. The system will only show here advance payments which are waiting to be adjusted so that you can select and offset against the bill being booked. Other than this, there are recovery options available here. If this particular bill is an expense that needs to be recovered, either from your employee, or from customer, or from any other party, then you can define in Recovery section. You can also define if there are any other changes along with this bill that needs to be accounted. This is fully tax compliant. You can press this button to know if there are any tax applicable for this bill and check breakup of the same. Other than booking bill against material receipts from vendor or MRV, you can also enter vendor bills which are booked manually and received directly by finance for certain services or other direct expenses incurred. Now let's go and see if we have made any payment against this particular bill. For that, we will go into the Payment Management application and press the View button to populate existing payments here. Let's have a look at payment number 3, which is exactly the one made against bill number 1. As you can see, this payment is made against the bill and document number is indicating bill number in this case. You also have party reference details such as vendor bill number, due date, and bill date. We have chosen payment type as against bill in this case, and this is why it is displaying all the information relating to the purchase bill. Due payment amount against this bill was $115,000, but payment is made partially. That means balance of $65,000 is still an outstanding amount that needs to be paid against this bill. So this is about accounts payable. Other than this, you can also raise credit note or debit note to your vendors or customers in case needed due to rejections or delay penalties, etc. Let's have a brief look at this application. In the given example, debit note was raised to the PLM towards delay penalty, means this delivery of the material was delayed by vendor. There is a delay penalty imposed as per agreement, and delay penalty is $5,000 in this case. This is the same bill that we just saw in the bill booking process. The outstanding bill amount is $65,000 after one part payment of $50,000 was made. So out of the $65,000, $5,000 is the delay penalty imposed on this, and therefore, balance to be paid to this vendor is $60,000. Similarly, you can also raise debit or credit note against sales invoice raised to your customers. These debit or credit notes are very important when there is any dispute, bad debt, or to handle penalties. Now coming to accounts receivable, which starts from sales invoice. We can raise sales invoice in different ways, but before that, let's populate existing invoices and have a look. Some invoices here are raised against the delivery note. Some invoices are raised for the job work done. Manual invoices can also be raised. While raising manual invoices, you are required to select items manually, but in this case, stock does not get updated. There is a fourth option, which is delivery cum invoice. This is also a manual type of invoice, but it is integrated with price list and it updates inventory as well. There are some advance receipts from the customer, which are called commitment. You can offset these advance receipts against the invoice being raised. This is similar to adjusting vendor advance payment while booking bill. So let's take this example and proceed with receiving payment against this invoice. We'll go to the Receipt Management application and we will open or view the existing receipt. Here, receipt number 9 is exactly the receipt that we have made against invoice number 7. The document number 7 indicates invoice number, and this particular receipt is made using option Against Invoice. It covers all the details pertaining to this receipt, including bank in which the payment is received, mode, or the payment indicates if this is wire transfer or through check. In the Party Details section, you can select multiple parties so that you can make single receipt against multiple parties, and each party may have multiple invoices. So it is a consolidated receipt that you can make to optimize time to do transaction. That's all we have in this accounts payable and receivable demonstration. We will have more in Part 2 of the financial module. Thanks for watching.